Hello, everyone. My name is Rachel Deschelle. I'm a senior manager with trading services here and your host for Long Options. This is a class where we focus on option buying strategies and we make the assumption that you are already familiar with the basic concepts of options. So if you aren't, feel free. You can stay tuned today, but we also have a Getting Started with Options webcast as well. Now, I am joined in the chat by Brent Moore, so please chat in your questions and comments during the session today. We'll keep an eye on those as we go. And please feel free to follow us both on X, Brent Moore's CS and Rachel CS. And please subscribe to our Trader Talks channel on YouTube as well. We would love us subscribe there, and please like this video at the end as well. So before we get started, we're going to cover LEAP's options today. I know we've had a lot of questions asking to cover LEAP options, so we're going to get into that today. But before we get started, we're going to cover some important disclosures here. So options carry a high level of risk and are not suitable for all investors. All the information we're going to share today is for informational and education purposes only, should not be considered any type of recommendation or advice. And then we're going to place some trades in the paper money platform. It has a few differences from the live settings, so keep that in mind. Now, our agenda is just to kind of review the markets, review our previous trades, discuss the concept of long options, concepts of price, time, and volatility, and then place an example trade on the paper money platform. So let's dive into our quick market overview here. We obviously are recovering from that sell-off that we saw over the last couple weeks here. We saw Friday was a big reversal candle, especially in the major market indices here. We had a massive hammer candle that actually broke through our 20 period simple moving average, found support really near that 50 period, and then bounced up from there. And actually on a closing basis, if we kind of look at the close here, well, market's not closed yet, I should say, but looking at where we possibly may close, that is putting the Dow at a new all-time high on possibly a closing basis today. So that could be something for the bulls there. Now let's look at the NASDAQ composite. Similar story here where we had that hammer candlestick, which is that bullish reversal candle right at that 50-day. We had a big gap up yesterday above that. And now today we have a little bit more of like an inside day, which could indicate a possible pause or possible reversal in this move up. So we'll just kind of have to see, but that 20 period simple moving average is definitely going to act as that near term support. And plus with that gap, or I guess that gap really occurring at the same kind of zone that we're seeing that 20 period moving average take place, traders are going to watch that entire gap ledge as support. So keep an eye on that. And then of course the S&P 500. We made our way the last few months through that rising bullish channel that we saw there. Obviously Friday, we had that break of the 50-day, but again, found support, gapped above that, similar to what we saw just here a minute ago in the NASDAQ. But we're chugging higher today rather than kind of seeing that pause like we saw more kind of in the NASDAQ there. So we're seeing that continued move higher. Obviously, there's a lot of things looming in the market. We are almost done with earnings season here, which has proven a good track record of earnings. And then we also are hearing about a possible end of the government shutdown. So definitely something that may be on the horizon for markets into year end, because we know that November is typically, statistically, historically, the strongest month of the year. So that's kind of what bulls may be watching, but we'll obviously have to see. It's no guarantee for the future. So something that we're going to start with here, we're going to just review a couple old trades. I'm going to pull up the chart of Nike because that was one of the trades that we were in. Now I'll show you, we took that bear flag position where we were long 5 put contracts of, let me check it. We are long 5 put contracts of the 19th of December, 72.5 strike puts. And last week when we hit those lows, I'll kind of put this on the chart. Last week on Friday, when we hit those lows right there, I actually closed out 2 of the contracts to take profit there, since we had already made ourselves halfway down the flagpole. And then I tightened up the stop even more. So we got stopped out today at that $11 stop for the rest of the 3 contracts, which, whew, we are glad we got stopped out, because that is a big move today. We took about a $2,000 profit on this one, but we are still in some of our other trades. Now, we're going to just hop right into the leaps, because we have a lot to cover today with leap options. We're going to kind of go into a scan, kind of building a watch list for leap options. But first, we need to talk about what leap options are, how they're used, the pros and cons, all the fun stuff. So leaps are long-term anticipation securities. They typically have a year or longer expiration, sometimes 2-3 years. And I kind of want you to think about leaps this way, where when we're trading options, if we're looking at shorter term expirations, that's typically where we're looking to be a little bit more of a swing trader. Now, if we're looking at an expiration that's a few months out, we're giving ourselves a little bit of time. That's more of us being a trend trader in that case. But in the case of leap options, when we are holding that option for a year or longer, when we're looking far out with expiration dates, we are holding that option for a year or longer sometimes. And so we're holding that option through multiple earnings announcements, events happening throughout the year, different seasonality measures. And so we're kind of thinking as leaps as us being longer term investors in that case. And I think that kind of the things to keep in mind too is leaps are going to have, I guess, fundamentals are going to have a bigger factor in leaps. So when you look through our watch list today, we're going to keep that in mind and put a couple of filters in for fundamentals as well. And then the other thing to keep in mind is when we craft our option strategy, it is going to look a little bit different, because you'll kind of see with the Greeks when we run through the examples, we have much less time decay, really no time decay at all in the leaps compared to shorter term options. And then we're also going to have a smaller delta as well. If you look at the same strike of multiple option series, comparing that to the leaps, you're going to have less sensitivity on the long-term option than you would on that near term. So as we get closer and closer to expiration, our delta is going to get larger and larger. So that's where we'll kind of see later, we'll kind of craft our strategy around possibly closing or rolling that option as that delta gets larger and larger. And then another notable thing too, obviously throughout the year, volatility is going to fluctuate in a leap option. But the thing to note when it comes to sensitivity to volatility with the Vega is going to be a lot larger on a leap option than it would be on a shorter term option, just a couple months out or a few weeks out. So you're going to obviously be holding that option through varying levels of implied volatility, different earnings reports, things like that, where you'll see those increases in implied volatility. So for the long life of that option, it's not going to be such a huge factor that we're going to look for of like a high or low IV percentile, but just something to keep in mind that it will be sensitive to those changes in implied volatility too. So, and I do see we have a survey in the chat today. I will ask you all to please fill that out. We definitely take your comments into consideration here. I love reading your guys' comments, the good, the bad, everything. So I would definitely love for you guys to take a minute to fill that out throughout our session today. Now, let's talk a little bit more about just, I guess, kind of like the pros and cons as well with leap options. Now, some of the pros that you have with a leap option or those longer term equity anticipation securities is that you have more time for the asset to move in the desired direction. So And we talked about kind of over the long term, volatility won't impact it as much because you're going to see that those fluctuations in implied volatility. Another huge benefit is you can control a larger position in that underlying stock with much less capital. So obviously the capital efficiency is there. And then we talked about it being a less sensitive to time decay as well. Now, there are some cons or some downsides to LEAP options, like there is with anything. There's always an upside, there's always a downside. So it makes sense to consider both, like the benefits, the risks, the pros, and the cons. So some of the cons are because they have so much more time value than shorter dated options, their option prices are going to be a lot more expensive. So that's one thing that we're going to look at on the option chain too once we get there. You also, because you're wanting to participate in the move of the underlying stock and almost hold it as a longer term investment with a smaller amount of capital, you have a major difference there with holding the long-term option versus the stock is, I mean, one, you're not entitled to any of the dividends unless you exercise your option and forfeit that the rest of the extrinsic value there. And you have no shareholder rights like you would with being long that stock. So those are a couple downsides there. And then you are going to have lower liquidity in the options as well. The further you go out, you're going to see lower levels of open interest, very little volume likely in those options as well. So that's why we kind of have to be kind of careful as we craft our watch list to find liquid stocks that would have liquid enough options with tight spreads for those as well. And then another con is availability. You're really not going to have LEAPs available for every optionable stock or index. So that's also something to kind of keep in mind too. So kind of putting all those factors together, kind of starting with just what LEAPs are, how they're going to be used, the pros and cons. I want to take you through just a scan on how to build a watch list for stocks that you could trade LEAP options on. And we're kind of going to go through that list and narrow it down here. So let's go to the scan. And I'm going to collapse the left sidebar here. And I'm going to start at the top. I'm going to scan in all listed stocks. So all listed stocks here. We're going to keep that in mind. And we're going to put a couple price filters here. So the first filter is we want stocks that are at least greater than $20 because we want a, I guess, medium to higher price stock there. So it has more liquidity in the options. Another one we're going to do, because we talked about fundamentals, we're going to put a couple fundamental filters in there as well, since fundamentals are obviously going to have a lot more influence since we're holding it for longer than a year possibly. We're going to look at, let's just take a look at earnings per share. And we want a positive earnings per share. Now, once we narrow it down, we can look in the Analyze Fundamentals tab, which we will for one of these, to look at earnings growth over time, but we're just kind of taking the top down and filtering it out for positive earnings here. Now, the next thing we're going to look for is a return on equity. So I'm going to go to Fundamental again, scroll down to, where is it at? Return on equity. And this is taking that net income divided by the shareholders' equity, and it's really used to compare a company's profitability over time or against its competitors. So that higher return on equity, or ROE, really indicates that this company is better at using its equity to generate profit. So just another fundamental filter that we're going to put in there. We're going to look for an ROE greater than 10 there on this one. Now you can see if we hit scan, that's still a lot of stocks. So we obviously got to narrow things down quite a bit, even more. And today, I forgot to mention this in the beginning. Today, we're going to take a little bit more of a like long call mentality, since there's nothing in this this paper money portfolio that we have to hedge in the long term. So we're just going to take this opportunity to participate in the bullish bias of the market and look for a long call today. So we're putting these fundamental filters in, these price filters. We're going to get to the technical filters as well. So the next one I'm going to look for is average volume. Now we want highly liquid stocks because we talked about that liquidity. We talked about the lower liquidity in LEAPS options. So we want to make sure we find a stock that has high enough liquidity where its options would be liquid as well. So I'm going to add another filter, and I'm going to go to study. And I'm going to go all the way down to volume and add average volume here. And I am actually going to look a little bit higher at 3 million shares traded. So the 50-day average of volume is greater than 3 million shares traded. Now you'll notice that narrows our list down quite a bit as well. So we're showing 140. Now, a couple other things, since we're looking to buy a call option and participate in that bullish bias, we also may want to put a trend indicator on. And the one I'm going to use is looking for a stock that is above its 50 and 200-day moving average. And right now in the market, the majority of stocks are above their 200-day moving averages, which is one of those breadth measures. We have, I think, close to 50 now. It's been increasing for stocks above their 50-day moving average. So more stocks are being kind of added in the mix there. So let's add a filter for study. And I'm going to go down to custom in this case. And I'm going to pull up this condition wizard. Now, you guys are free to use this ThinkScript editor. I'm just going to show an easy way on how to use the condition wizard for this, and add a couple conditions here for above the 50-day and the 200-day. So the first thing I'm going to do is click on the left side, go to price, hit close, and then going to select is greater than study, type in simple, and replace the length with 50. And I'm going to say save. Okay, so we have the first one there. Yeah, you can obviously copy the script, but we're going to go through it again. We're going to add another condition. We're going to select price, close, is greater than study, search for simple, and look for a stock greater than its 200-day moving average. So you can do that as well. Hit save, and then I'm going to click OK. Now, with all these filters added, I am going to hit scan. And there we go. And that gives us 64 different stocks that we could look at. So I think, and I see, I was just checking the chat there. Thank you, Brent, for answering some of those questions there. Yeah, we're just kind of understanding the principle today. We're kind of adding just a mix of different things in here, fundamentals and technicals of the bias that we kind of want to take with the market there. So let me see if there's any other ones as well. Okay. Adding a filter for a little pullback. You could, as long as the longer term trend is still intact, because I think it's important to note that since we talked about these being a year or longer, sometimes 2-3 years, however long you're looking to look out in time, you're taking the mindset of a longer term investor. So whatever, and it's going to probably cause you to zoom out on the charts as well. And we'll kind of take that view as we look into the technicals of one of these stocks too, because we're going to look at both the technicals and the fundamentals, which is something that we don't do too often on this webcast. But since we're looking more longer term, we're going to take that mindset of a longer term investor. So it could be a stock that isn't a pullback of its overall trend, still has strong fundamentals there. But again, this is just kind of a sample watch list that you can use today. You asked about the 10 and the 30 moving averages, or 19 and 30 moving averages. The reason why we're not using those is because those are more of the shorter term trend. That 10 days, just 2 weeks of price action. The 30-day is like a little bit over than more than a month. So because we're looking at that longer term trend, we want to look at that 200-day and 50-day, just in this case, just in this example. So this is going to give me a good list of stocks. Now I'm going to save this scan query, name it our Leap Scan, hit save, and I will share this with you guys in the chat. So I'm going to click share, and I'll share it in the description of this video as well. So let me put that in there for you if you guys want to use that scan, or I guess I will say this isn't any type of recommendation with the scan. It's just something we're creating for educational purposes only. I mentioned that in the beginning, but just mentioning that again. So we'll include that in the description of this video as well. Now, I looked through this list of stocks before this show, and there were a ton of great examples, but what I noticed was their total volume on their options traded throughout the day typically, and in the longer term options, some of these are a little bit lower, even with the volume in the underlying stock. So I would just say get this to a manageable list. And honestly, for me, 64 is a very manageable list. I can just keep it on the left sidebar and scroll through it, click through all those in less than 15 minutes, 20 minutes or so. So the one that I kind of came across for our example today is TJ Maxx. So I'm going to use that as our example, TJX. And the first thing I'm going to do is take a look at the chart and look at the overall trend in the chart for TJX. And we can even zoom out too. But this stock has clearly been in an uptrend this year. It took some time in a range, kind of digesting some of those gains. And now it broke to new highs there. And if we kind of take it one step further, looking long term, this stock has really been, over the last few years, been growing and growing with higher highs, higher lows. So this stock is in a sustained uptrend here. So I thought technically this could be a good example here. We had that recent bounce from its 50-day moving average. And then if I added the 200 period on here, you'd clearly see that it's above that as well. So that could be something where you could buy a long option on a retest here. Obviously, we're going to buy it on a breakout here today since we're looking more longer term. Now, let's go into the analyze fundamentals and take a look at the fundamentals of this stock. Now, something that I know some traders use is looking at some analyst ratings here. Obviously, make sure that they match your type of analysis. Some of them are fundamental, some of them are more technically driven, some of them are more quantitative. I guess the majority of these would have positive ratings on TJ Maxx. And then another thing here too, we talked about positive earnings, but we wanted to look for specifically a stock with earnings growth, because earnings growth is typically kind of what leads to that stock. Now, since we've narrowed down to a stock, we've done the scan, we've done all that with kind of like our top-down approach there, let's get into a little bit more on the options and kind of what we're going to look at as far as our option strategy here. And the first thing I looked at, it's kind of an easy way to just kind of tell if a stock trades a lot of contracts in its options, is just easily looking through your watch list, having the today's option statistics window populated, and just looking at the number of calls and puts traded throughout the day. Because even just the overall volume of that stock's options in all the contracts, all the expirations, that will give you an idea of how liquid those leaps are going to be. Because if it's only a couple hundred contracts throughout the day, you're probably going to see pretty wide spreads. You're probably going to see very little open interest in those leap options, especially. But this one, we know that its options are heavily traded, especially since they offer weekly options as well, which not every stock does. So a couple other things to kind of keep in mind as you're working through a watch list for LEAPS there. And then another thing that we're going to look at is we're obviously going to look at an option that has a year or longer. So I'm going to target the 15th of January of 2027 with 430 days left till expiration. So I'm going to open up that window there. I'm looking at all the strikes. And we're going to look for a strike that has a 60 to 80 delta. And we talked about how that delta is going to be lower now, but the closer that we get to expiration, especially if that option or if that stock moves in our favor, that delta is only going to get larger and larger. So that's kind of going to be our plan for exiting this position. If the delta gets larger and larger, obviously we're going to have a stop and some risk management to the downside in this case. But if we just take a look at, for instance, I'm going to use the example of like the 130 option. We can take a look at the 130 option here that has 766 contracts of open interest. It has a good amount of open interest there. That's going to give us a delta of 74. So for every dollar move in the stock, our option is going to move roughly 74 cents. Now, if we just compare that to a nearer term option here, like the one with about a month out to expiration, the 19th of December, if we take that 130 strike option, so that same option strike but different expiration, we'll notice that the delta on that is much larger, close to 90. So that's an 89 delta, obviously a much larger move there. So we're going to take that into consideration as we craft our exit strategy for our option as well. And let me see, I see a couple questions in there or comments in the chat. Gary, you mentioned it's kind of thin. It still has a few thousand contracts traded, but what we look at is specifically with these as well, since we know the contracts traded are going to be very light in the leaps just because of the nature of how long they are to expiration, we're going to look specifically at the open interest a lot more. And then we're going to also look at the spread between the bid and the ask and just make sure that's less than 10%. So that's kind of what I'm keeping in mind here as I'm building a strategy for our TJ Maxx here. And we see that even just throwing out this example that we did with the 130, 2650 by 2830, that's still a pretty tight spread for where we're at there. And it has some volume on the day as well, probably tightening up the spread just a little bit. So we have a sufficient level there. Now, let's see. I have a couple other questions. Let's see. Stop on the option. How do you set it? Volatility seems to trigger too soon or miss it. And then I see a question about long call verticals. So I'll answer that one. We have another class on long call verticals. We can't teach verticals in this class. We're just teaching long calls, long puts. So sorry about that, but I know we have Brent will pop another link in the chat for that. And then stop on the option. How do you set it? We're going to talk about that here in just a minute. So let's just kind of go with this example of that 130 option. So if I select the 130 option here, actually, I'm going to right click on it and do buy custom with stop. Now, for a couple reasons, I'm doing a first triggers order on this one with it just triggering a stop order because I'm going to hold this option like I would a stock. So I'm going to let this trend continue. I'm just going to let our profits ride to the upside should it continue in that direction. So I'm not really going to put a profit taking order in that case. I am going to do something as far as like setting an alert on the delta of the option. So I'll show you that in a minute here. But as far as this price here of the option, now we're still working within the risk parameters of our account. We can risk about a little over $6,000. This contract is only going to cost us $2,800. So if we wanted to, we could do 2 contracts. We could bump it up. I'm just going to use this as an example today, just 1 contract in this case. And then typically in this class, we use a 50% stop because that has just been an easy way to cut the losses for risk management, to say that when the price of the stock, when we've lost 50% of our premium, we want to get out at that option at the next available price. Now we're going to do something a little bit different today to stay within the risk parameters of our account. We're going to make sure we're still only risking 1% of our account. So we're going to make that stop a little bit higher. And what we're going to do is I'm going to start our entry price here right at the midpoint here. There we go. At the midpoint there. And then what I'm going to do is take that entry price and I'm going to multiply it by 70%. So if we've lost 30% on this option, that's where I want to get out. So I'm going to take 2705 times 0.7. And that gives us an exit of 1893. And so that's keeping us still within the risk parameters of our account, not risking, because our risk parameters are a little over 1,000. So we're still within that time frame. We're going to change both of these till good till canceled there. And so with stop orders, obviously a risk with these, I mean, you can use stop limits, other stops as well. You got your trailing stop there. The risk with this one is that once the price of the option hits 1893, we're going to get out at market. So this isn't a guarantee on the price, obviously. It's just going to execute a market order when the option hits that price. And that's specifically when the ask of the option hits that price is actually when we get out. So that's what that standard means. It's going to take the ask of that option when we're selling for our price to trigger there. So that's something to keep in mind. Now you can change it, but you can change it to the mark, whatever there, but it's going to take that asking price on that option. Now, a couple other things here. So what we also talked about doing, we didn't talk about placing a profit-taking order in this case, but I mentioned just placing or exiting or rolling this option when the delta is getting larger and larger. And so I want to exit or roll this option when the delta moves to 85. So I could just right click on this option here, and I'll just show how to create an alert on that delta of the option. Now alerts, you can have them trigger in all different ways. But if you right click here, create alert, I'm going to change this from price to delta, and we're going to say at or above 85 here. There we go. So exit, roll. So I'm going to click create here on this one. And let me just double check the chat. I see a lot of questions in there. Let's see. Yes, we have some analyst price targets. We typically see with analyst price targets, they typically kind of chase the price in that case. So I'm not using that as in this type of strategy when we're kind of thinking about the long term. What type of order is she using? I missed it. I basically just right clicked here, Jay Taylor, and I went to buy custom with stop. So essentially this is a first triggers all order, or just a first triggers another. So once this order gets filled, we are going to have our stop in and working good till canceled for that order. Now, these good till cancel orders, something to keep in mind with these as well, especially on leap options, is these are going to default to 6 months. So you have the capability to change that good till cancel at any time. So you could have that going for longer, but just keep in mind that this is going to last 6 months there. So if that expires, or if you want to extend that expiration, you definitely can. Let's see. What other? Okay, analyze tab. So you're praying the spread is tight using this method. Not praying, we're making sure the spread is tight. So we want to look for a spread that is less than 10% of the option. So we want to ensure that that's the case. We want to look for a good amount of open interest as well. Let's see. And then where is the option statistics tab here? It's actually just below the options chain. So if you just open up this, you kind of scroll down past all the expiration dates, you can see today's option statistics and open that window there. And then as far as earnings, TGX earnings, you're going to be holding this option. I mean, if you're really taking the mindset of a long-term investor trying to participate in the moves of the stock throughout the year, you're going to be holding this option through multiple earnings announcements. You can see the IV percentile is still a little bit elevated. We talked about that higher vega or that higher sensitivity, but you're going to be holding this option through many fluctuations and implied volatility. So that's just kind of something to keep in mind there. So we're looking here at placing that order for 27.05 with our stop being 70% there. We're going to click confirm and send. Double check our order, obviously. Now the most we can make to the upside potential is obviously unlimited. The stock won't likely go to infinity, but we have uncapped potential there. And then to our downside, obviously the most we can lose is what we're paying for the option. That's why that max loss shows there, because that is the premium that we are paying for the option. We want to cut our losses a little bit earlier than that. Obviously, we talked about no guarantee for the exit on the option, but we're placing our option at 70, or our stop loss at 70% of the option price. So I'm going to make sure we place this in our long options account so it goes to the right one. And I am going to hit send there. So that is one we can watch there. So really from start to finish, this shows just an example process like we talked about of what you could use for ideas for scanning for LEAP options, how you could build your trading process around LEAP options, and various things to look for, and the mindset to kind of adopt in this case. Because with these, you are not swing trading, you're not trend trading, you are looking in the mindset of a longer term investor in this case. So hopefully walking through that process from start to finish helps today. And we will kind of keep an eye on these trades as we go. But I just want to thank everyone in the chat for your engagement. This has been awesome. You guys have had tons of great questions here today, so I want to thank you, and thank Brent in the chat as well. You have kept him busy, so thank you for him. You can follow us both on X, Brent Moores CS, Rachel CS there. We post a lot of charts, a lot of ideas out there. Thank you to our producers. Thank you for all of you for tuning in today. If you liked this video, please like it. Please fill out the survey that we saw earlier in the chat today. I would love your candid feedback. We always take that into consideration. I promise you that. And I will see you next week. And please subscribe to our Trader Talks YouTube channel as well. But thank you everyone today. See you next week.